The push is on to create a central bank digital currency, known as a CDBC. But what is a central bank digital currency? Well, in a nutshell, it is the digital version of the fiat money we know today. In the US, the dollar or the coins that support that dollar. A digital version of that, which would then eliminate the actual tangible fiat currencies, how we know it today in our markets. Let's talk today about what the pros are, if any, and what the cons would be to have a digital currency rollout in the United States of America and in the world, and how many countries actually are rolling out their digital currencies as we speak. I want to share today with you guys a little bit of an article. I'm going to kind of read through it and give some commentaries. I do these videos for my friends and family, and I love to grow this, to get this out to more people and find the algorithms that can help people understand these things. It's an article today. I'll put the link down below when we're done so you can read it for yourself too. It's by American Hartford Gold, which is one of the main issuers and sellers of gold and silver in the United States of America. And I think it's a good article, and I've read other articles and heard other reliable sources that can confirm what I'm going to share with you today. Let's go through the article here real quick. They start out that the push is on to create a central bank digital currency known as a CDBC. In a nutshell, they are the digital version of the central bank issued money, fiat currencies we know it today, right? Over 100 countries, note this, over 100 countries are exploring digital currencies. Some have already rolled out these, such as China, India's rolling it out, Brazil's supposed to roll out now, but with their chaos that's happening down there with their last elections, I don't know when that's going to come, but it's coming. In the U.S., actually, in this article, I will go a little bit further than this. The U.S. actually is going to roll out this year their first level of digital currency payments. We're already been doing it. If you realize through PayPal, Venmo, Zelle, and so forth, and we'll get into Zelle a little bit here when we're talking about Citibank, Wells Fargo, and Bank of America, and what they're doing to try to be that new digital dollar. Okay, so let's talk about a little bit. Let's keep reading. Over 100 countries are exploring digital currencies. That represents 95% of the world's GDP, the gross domestic product. In other words, that moves the world. China, Nigeria, India have already issued them, as we talked about. CDBCs could lead to big changes in the basic activity of the central banking system, eliminating now all smaller banks. Our banking would be directly with the central banks. In other words, in the United States of America, with the Federal Reserve, with the Fed. We would not have the privacy of a small bank. This is why you've got Citibank, Wells Fargo, and Bank of America all striving, coming together to try to be that representation, that third party. Now remember, in California, the Department of Motor Vehicles already will hold vehicle registrations as what's known as a non-fungible token, an NFT, starting this year, already beginning the pilot program, meaning that you want to sell a vehicle in the future, you won't have to go through escrow, which will make it more difficult, more costly. And there's a lot of things that the state can do to actually charge. For example, you sell a vehicle to somebody below the Blue Book, in this case, the Kelley Blue Book, for example, the state can still charge you a tax based on what they felt should have been sold for, whether that's what you realized or didn't realize, and you get charged that tax. And I've seen this happen in these countries I've lived in. Get back to the article. The CDBCs could lead to big changes in basic activity of the central banking system, making and distributing money. That's the big change, okay? How you get your money and how it's made. Not like today. It'd be very different. There's more control over today. Well, sort of. As a result, your retirement funds may soon be under control of the federal government, and that's true. We go digital, all retirement funds will be under control of the federal government, not third parties or third-party banks like JP Morgan, etc. The Fed Chair Jerome Powell said, the U.S. Central Bank has no plans to create a digital currency without the direction from Congress. And that's not necessarily true. They do have plans. They're rolling out. And if you remember going back to last year, Joe Biden, the current president of the United States of America, had even said to explore how the benefits, the pros and cons, and to move forward in rolling out a digital currency. Okay, so he issued that as a directive from the President of the United States. So there's every aspect or every desire to roll out a digital currency. And because, why? We have to compete with the Chinese digital yuan, which is backed by gold, to replace the petrodollar. The US dollar fails to be the petrodollar. In other words, used to buy and sell petroleum in the world. We fail to have that global esteem. We fail as a dollar, as a currency. And the Chinese yuan is being backed by gold, their digital yuan, which would be the petro, where petro would be traded in. Now, Russia's trying to do some things too with the ruble. But all in all, Russia and China are in the same bed together. So I'm sure there'll be some sort of a common ground made there. So Jerome Powell says that they're not going to roll a digital currency out unless Congress approves it. Look, they're moving forward with other crypto laws outside of Congress approving anything. And based on, if you would, some of the laws that maintain currencies and the stability of the US dollar. Right? So what Jerome Powell says and what Jerome Powell does is not necessarily true. However, 9 US financial institutions, including Citibank, Wells Fargo, and MasterCard, recently joined the Federal Reserve Bank in New York to test the digital dollar. Now, that's been some time back, like towards the end of the year of last year, 2022. CDBCs can be divided into two types. Let's go into this. One for bank use, and the other, just a variation, for a payment system. The payment system, the other would be like for us. Now, when I was in Cuba, under the Castro rule, I had the opportunity to go there. There were two currencies, one for the people and one for tourism, right? And then there's another that the government used. That was mostly dollar backed, and that was, or dollar, right? And so, but the people could not use the same as the tourists could. And they're divided into different currencies. And that's the same idea we're talking about here. You'll have one that the wealthy and the elite and the corporates and the bank types will use that exist still, and other that we will use to make payments and get paid in. At first glance, the public use of CDBCs doesn't look much different from your current online bank account or Venmo or Zelle, whatever, right? What the consumer doesn't see is that your money will be in an electronic wallet controlled by the government, not by you and not by your commercial bank. You see, that's the big difference. It's controlled by the Fed, not by you. In other words, you don't have your money in your safe, and you won't be able to keep your money very long into an account with the Fed. It'll expire, just like it does in China now. I move on. The result is fundamental shift in control. On one level, central banks want to retain control of the international finance system. Banks recognize the challenge posed by cryptocurrencies, and they do recognize this. That's why there's so much FUD and so many laws coming down against it, because it will allow that free market and not allow the government to control our monetary system. Beholden to no government, crypto is viewed as the rival to central banks, you see. Crypto can undermine a central bank's power to control an economy through monetary policy. That's huge. That's why we support Bitcoin and decentralized cryptos and decentralized blockchain, not centralized. Big difference. They're talking about a digital currency, which will look like a cryptocurrency. They're going to call it that too, but it's centralized. So it's really not what a cryptocurrency is. And they're dividing two camps now. It's called the Bitcoin camp and the crypto camp, because a lot of cryptos are going centralized, and that's why they're getting attacked by the SEC right now, the Security and Exchange Commission, but where Bitcoin maintains outside of that reach. And the SEC and other government agencies have said Bitcoin's outside of our reach. It is decentralized. So we maintain decentralized market. We maintain freedom outside of governments, at least the U.S. government, while our Constitution is still intact. The race to use U.S. dollars, U.S. digital dollars, is spurred by the fear of losing dollar dominance. Here we go. There's a worry that if we don't launch a digital currency in the U.S. or Europe, China will set all the standards for them, for both U.S. and for Europe, and then we'll be at a disadvantage. And this is true. This is quoted by Megan Green, a global chief economist at the Risk and Financial Advisory from Kroll. Also, digital currencies like crypto really scared the bejesus out of central bankers. And they do. They scare central bankers. I'm just quoting here, okay? Finish. The digital dollar is also about controlling the individual. CDBC, central bank digital currencies, the digital dollar, is pitched as a benefit for individuals. And it will look like it's very convenient, like it is now. To pay in Venmo, don't have to carry cash. I talked to a cashier the other day, and she's had a mask on in an area where they're not really wearing masks. I asked her, are you sick? She said, I've been getting sick, and I think it's because I'm at the register handling cash. You see, so that's going to be a reason, COVID was a reason for people to say, hey, no more cash. When I was down in Ecuador, they were going cashless. They're talking about taking the buses with just a pass, right? Where you just pass it, nobody has to inter-exchange anything. This is going to be one of the conveniences and one of the fears of they're going to push people into a central bank digital currency. A digital currency could allow governments to track every transaction you make, and it will, not could, it will. This may deter some crime. Now, they're going to tell you we're going to have a third party do it, like the Department of Motor Vehicles in California is using the Tesla's blockchain to hold your title to your vehicle. That's a third party. But guess what? What happened if that third party gets hacked or if that third party decides to actually steal your vehicle, your title from you? DMV is going to say, we had nothing to do with it. So this is a great way for governments to actually come in, control us more, and have less responsibility. And this is what they do, like in Ecuador, for example. They have what's called ML Norte, which is their electronic, or their power industry company. And they handle all the power, electricity that goes into people's homes. Well, ML Norte will scam people, feed the government. The government comes out and says, shame on you. You shouldn't be doing that. And they say, give some of that money back. Give that money back. Well, they'll take $100 for you and give you back 20, right? And the people go, oh, okay, I got my money back. But see, that's what they do. They just put that screen up there, that smoke screen that, oh, that's a third party. We have nothing to do with it. But they do. They control it. Unless there's responsibility, then they can hide behind that responsibility and blame it on that third party. And that's what will happen. Look at the FTX collapse. And there's a lot of similarity in that if you were to do your homework. Let's continue on. For example, a ruling party may no longer permit the purchase of things it considers wrong. Hamburgers, for example. Like them or don't like them, it may say that's wrong. Or you may not be able to purchase Bitcoin. Or you can't purchase anything that has gas related to it. Like alcohol or even guns. The central bank could also determine who can transact with, isolating those it deems problematic. In other words, if you're a person that's on that blacklist, you're problematic, and then problematic meaning you've stood up against the governments, then you cannot be allowed to transact and do business. That can shut you down. A central bank could also determine if you are to express a wrong opinion. Your hands may simply be erased, or your funds may simply be erased. Retirement investors could be forced to put money into woke funds that don't align with their beliefs. And that's already happening. These big companies, these bankers that hold your retirement funds are using those funds to buy shares of companies, and they vote. They vote for you because you've given that right to them. All those that have IRA, 401ks, etc. I did another video on that. You can find that here on this channel as well. And you can they actually buy those shares, and they hold huge voting blocks, and they're pushing companies and businesses to go woke with a woke agenda, and all the way down the food chain to the small businesses. And that's going to choke us out unless you're going along with the game. Retirement. Okay, so one of the biggest concerns is wealth of ignorance surrounding digital currencies, and that is true. There is this huge wealth of ignorance out there, and I say that innocently, but ignorance meaning that people just don't want to go out and learn. I try to teach people, but they don't want to sit and learn. I'm like, I'm telling you what's coming, but they don't want to wake up. I hope that you are doing the same and trying to help other people. Obviously, you're awake. The crypto world is ripe with stories of billions being stolen or lost because the technology was exploited in some previous unknown manner, like with FTX and some of these collapses this last year. And those were all programmed. They were all pre-planned. They were all set up to be able to cause this domino effect. Do your homework on that. You'll see there's truth. Then there are the unknown unknowns. Global problems we can't even think yet. I think it's inevitable there will be unintended consequences as a result of the CDBCs, said Ms. Green. A senior advisor at the Bank of England recently came out strongly against CDBCs. He argued that the issue of digital dollars are meant to solve the issues that are meant to solve can be fixed with legislation. Plus, the cost of, and I don't necessarily agree with that because more laws do not help solve the problems. It's more free market economy resolves the problem. Less control of the government, more free market, we resolve the problems. For example, inflation. Inflation will correct itself because we as a market will correct that. Plus, the cost to create a entirely new global financial system aren't worth the benefits. And think about what the carbon footprint's going to be to do this. And I'm talking about the crypto miners, those who mine crypto with GPUs or with ASIC miners. The cost of electricity is just the carbon footprint so high. Yet this is going to be much higher. We're talking about blockchain here. This is a centralized blockchain. It's the same thing. But if we mine it and it's in our hands, in my home, like this behind us there, or in somebody else's home, it's in our hands. You see, that's very different. They don't want that.